Good afternoon. Today is Monday, June the 19th. Time right now in Singapore is 9 minutes past noon, and today is also a US holiday as the US celebrate a brand new holiday called the Juneteenth holiday, which is basically a celebration of the freedom of slavery back in the 1800s where during the Civil War. So this is a brand new holiday inaugurated by President Biden. So today there will be no markets in the US, and let's do a bit of recap over what happened over last weekend. Now on Friday, we have seen the release of the retail sales, which is actually showing that retail sales is actually pretty robust, and the market has basically ran up on the back of a FOMC meeting in which the Federal Reserve actually paused its rate hikes after 15 months of very aggressive rate hikes. And the market take it as a sign that the end is near. The end means the end of the very aggressive rate hike cycle is possibly near an end, and they take it as a signal to go back into equity markets. And we have seen the US equity market has rallied to a 14 months high, January speaking, before it peaks and closed on a weak note on Friday. That is understandable because it's just a super long weekend, because today is a market holiday. So most people who have gone long and decided to take some money off the table, and that saw the prices come back down towards the close on Friday itself. So going forward, will we see continued weakness in the US equity market? Most likely. In the Dow Jones, this is a 4 hours time frame. We can see that the price hit a high of 34,588.68 before it reverses direction on the 4 hours time frame. However, there is no confirmation of a reversal. This is seen as a technical pullback if there's going to be one. And most likely, if we see continued weakness, prices may actually drift lower to test the 34,100 to 33,800 levels. So just take it as a technical pullback. We have no evidence to suggest that the market has peaked and is getting ready to reverse. And this level, especially the lower end of this range here at 33,800, you can see there's a pivot point here, which previously held the market here. This is 33,805. So using this pivot point as a guide, there is every possibility any pullback that we see may not actually go very much below here, okay, if ever. Okay, so this is a situation in which I think the market may actually stabilize for a while before it ran up again. Okay, so in the S&P 500, again, we are seeing the same thing. Market hit a high of 4,448.5 before it closes a little bit weaker, and this is suggesting that we could possibly see a short-term weakness going forward, and most likely the price will actually drift lower to 4,355 to 4,300 levels, and this could be a level in which market may actually hold before it attempt a marginal high beyond 4,448.5. So this is likely to be the case here. We see a drop, and then we may see another rally attempt. So that will be interesting, because after that we probably will see a much bigger retracement. In the Nasdaq 100, we are also seeing something similar, but again, the market went to a new high at 15,285 thereabouts. And this is actually within the bracket of prices, which I think may actually see the emergence of selling orders. And maybe this is the case here. But in the meantime, we also see this pullback, if any, as a technical pullback. And within this area, I think my target zone is anywhere between 14,430 to 13,900. So this is a wide range here, but anytime the market pulls back into this bracket of prices, we may see the re-emergence of buying interest. Okay, over in Asia, we also see something like quite similar. This morning, the Nikkei have a brand new high at 33,772.9. This is a 33 years high, and likely the case, it may actually follow Wall Street on the way down if there's going to be a pullback. And if there's going to be one, I think most likely the market will test the 31,000 to 32,000 levels. Within this 1,000 points range, I think market may actually find a bottom before it attempts to rally one more time. Over in Hong Kong, the Hang Seng Index has actually peaked at 30,155, just below a major high here at 20,286. So we can see this drop back now as we are speaking is actually quite severe. And again, this is possibly another a chance for those who have missed out buying. Possibly we could see another chance to be able to be to actually participate on the upside somewhere between the 19,100 to the 19,350 area. So look out for some kind of stability here within this band of prices before the market attempt to challenge the much high at 21,000. Over in the mainland Chinese equity market, we can see the CSI 300 edge also picked about the same time as the Hang Seng at just under 4,000 points. Remember, I mentioned 4,000 points many times last week, and it does appear to be the market is also watching 4,000 points. And right now we have a bit of pullback. The initial challenge has failed, so it looks like market may actually pull back a little bit, gather more strength before it try it again. And it does look good that the market will actually be able to try the 4,000 levels one more time, and this time it may actually break it. So if the market do pull back, look out for some kind of bottom somewhere near the 3,870 to 3,970 levels. So this bracket may actually offer some kind of buying opportunity here. Over in the energy market, we continue to see energy prices continue to charge higher, coming very close to just under the $70 per range, and then we see a pullback just before the weekend, and this is actually setting the stage for a further extension of this rally if the market pulls back somewhere around $69.50 to $69 or just under $70. Look out for the market to actually stabilize, for the market to build another base here to take the market higher beyond $74.69. Over in precious metal market, we may see a marginal high going forward. We have seen the market actually traded to a low at $1,925, and then market reverse, and this actually may see the market extend a little bit higher to where somewhere I believe 1,976 to 1,989 levels. Okay, if the market do come back into this area, especially the upper end just beyond 1,983.5, I think that could set up the market for another leg down. So do look out for the possibility of another leg down below 1,925. Over in silver market, the silver market is actually very interesting. Either the price goes up or the price goes down. So either way, it's both possible. But based on the rally from $23.22 to the high of $24.21, the market is likely to extend a bit higher. So if the market go higher to $25.07 to $25.50, they may see sellers coming back into the market, and there's a possibility it may actually cause price to unravel towards the lower end of this bracket here, and that must happen before the end of June. So if we see this market rally into this high here, get ready for another pullback, and then somewhere in July, I think we could see a massive run up in precious metal prices. Over in the dollar itself, the dollar has been under a lot of stress, and we can see the market is possibly unfolding in the potential 5-wave decline. So if we have a bottom at 101.59 last Friday, this low here may actually see some kind of buying support here for a temporary rebound, ideally to 102.24 to 102.65 levels, and this area here will be vulnerable. We may see another leg down below 101.59 towards the 152 levels, which is the much low. So do look out for the unfolding of this potential 5-wave. After that 5-wave is done, we can see possibly a more significant rebound back to where this current rebound may actually ends. Okay, over in euro dollar, because the dollar is weak, all other currency has looked to be a lot more stronger than it is. Okay, so we can see in the euro dollars, the euro dollar has been going higher to 109.70 over the weekend itself, and the market now looks like it may actually pull back a little bit to somewhere 108.55 to 108.90 levels, and this could provide for another base for the market to go higher to challenge the 111. So the 111 is the previous high here that we saw in May, and this could potentially be a 5-way. Okay, so look out for this formation over here. Same thing in the sterling. Sterling has gone up even more compared to the euro dollar. So we can see a very aggressive move to 128.48, and now the market is right for a technical pullback, ideally into 126.70 to 127.40 levels. This could actually be an excellent buying opportunity for the market to go one more time beyond the 128.50 to possibly test the 130 levels. Over in the Aussie, we can see that Aussie has been very aggressive. This time the market actually went up to just under the 0.69 levels before we see a pullback. And this pullback, if it happens, is likely to result in a much deeper retracement compared to either the euro or the sterling. So likely we can see a pullback that may see prices going back to test the 0.6680 to 0.6630 levels. So again, look out for buying interest here because the dollar right now is definitely on the defensive. In the Canadian dollars, we can see that the fall in dollars can be exemplified by the fall in the Canadian dollars. You can see that the dollar Canadians actually completed a 5-wave decline. So right now what we are seeing here is a bigger retracement, possibly targeting 133.85 levels. So we probably will see a 3-wave pullback here, a rebound back to 133.85. So this could actually set the stage for another decline going forward. Dollar yen is obviously very different from dollar rates across the board. So much so because the yen is weak, not so much the dollar is strong. The yen, in fact, has been weak across all currency pairs, including the sterling, including the euro dollars. So when you look at the euro yen and the sterling yen, even the Aussie yen, they all have risen. So basically, it's the weakness of the yen itself. So when you see dollar strength here, don't be mistaken that it is the dollar strength. It's not the dollar strength, it's the weakness of the yen. So right now, I think the market is possibly already hit its peak here at 142 levels, and there's possibility the market may pull back. So if it pulls back and somewhere targets somewhere this black line here, which I have drawn the previous resistance, Norton support, could be an area of support, or the other way is to look for this blue horizontal line, which is a pivot line here. So again, anywhere between where it hit the black line here, which is the previous resistance, Norton support, or the 138.75 levels. Okay, so I don't think market will go below 138.75 if ever, and if it does, then that could provide some kind of support here for the market to rally one more time. Okay, because the yen weakness is a structural problem unless the Bank of Japan come in to intervene. So I think the yen weakness will remain for quite some time. Over in the crypto space, we can see that the rally from what 24,756 actually resulted in a very robust rally to 26,789 over the weekend, and this may actually set the stage for higher prices going forward. So because we have seen the market has already digested more or less the SEC, which is the Security Exchange Commission's lawsuit against Binance and Coinbase, I think the market has already digested news, and it looks like it may have already weathered the worst of that onslaught of lawsuit. So this is setting the stage for higher prices. If we do see a deeper pullback somewhere around 25,700 to 25,500, I think that level here may actually provide a base for the market to propel higher to challenge the 28,500 levels. So this is all I have for you for today. Remember, today is a US holiday, so don't stay up, and I will come back to you with another update tomorrow morning. Thank you. Bye-bye.